On March 26, 2025, Microsoft announced a significant shift in its data center strategy. The tech giant revealed it would be abandoning plans for new data centers in the United States and Europe. This decision sent shockwaves through the cryptocurrency mining industry, which had come to rely on the excess capacity of these centers. Bitcoin mining stocks, in particular, took a hit. Companies like Bitfarms, CleanSpark, Core Scientific, Hut 8, Marathon Digital, and Riot saw their stock prices plummet. The declines ranged from 4% to 12%, reflecting investor concern about the future of crypto mining. These companies had been increasingly reliant on data centers for their operations. The news from Microsoft highlighted the complex relationship between the tech industry and the world of cryptocurrency. It also underscored the volatility that has come to define the crypto market. This event served as a stark reminder of the risks and uncertainties that investors and companies in this space face. Microsoft's decision to scale back its data center plans was driven by a confluence of factors. One key concern was the potential for oversupply in AI computing capacity. The company had been investing heavily in expanding its data center infrastructure to support the growing demand for AI services. However, recent trends suggested that this demand might be slowing. Another factor was Microsoft's decision to scale back its collaborations with OpenAI, the research laboratory behind the popular AI chatbot, ChatGPT. OpenAI had been a major consumer of Microsoft's data center resources. The reduced partnership with OpenAI further contributed to Microsoft's assessment that it had overestimated the need for new data centers. These internal calculations had significant external consequences. The crypto mining industry, already grappling with declining Bitcoin prices in the aftermath of the April 2024 halving, faced a new challenge. The prospect of reduced access to affordable computing power added another layer of uncertainty to an already volatile market. The Bitcoin halving event of April 2024 had already forced many miners to seek alternative revenue streams. The halving, a pre-programmed event that cuts the reward for mining Bitcoin in half, significantly impacted miners' profitability. In response, many turned their attention to the burgeoning field of artificial intelligence. Companies like Core Scientific, one of the largest Bitcoin miners in the world, made significant moves to diversify their operations. In June 2024, Core Scientific pledged 200 megawatts of its computing power to CoreWeave, a specialized cloud provider for AI applications. This strategic partnership reflected a broader trend in the industry. Financial analysts saw potential in this shift. A report from Van Eck, a global investment manager, predicted that miners who successfully pivoted to AI could see a collective market cap boost of $37 billion. However, this optimistic outlook was tempered by the realization that the AI market was still developing. Despite the potential opportunities in the AI sector, the road ahead for crypto miners remained fraught with challenges. The decline in Bitcoin prices throughout 2024 and early 2025 had already put a strain on many companies. The reduced availability of data center capacity from Microsoft added to their woes. Moreover, the hoped-for surge in demand for AI services had yet to materialize fully. The development and deployment of AI applications proved to be more complex and time-consuming than initially anticipated. This slower-than-expected growth created further uncertainty for miners who had bet on a swift transition to AI. The crypto mining industry found itself at a crossroads. The old model, heavily reliant on Bitcoin mining and access to cheap computing power, was becoming increasingly unsustainable. The transition to AI offered a potential lifeline, but it was a path fraught with its own risks and uncertainties. The coming months would prove crucial in determining the fate of many companies in this rapidly evolving landscape.